Hey, what's going on? It's Nick here from Ways of Wealth. Thank you for tuning in. Week 28 of the market recap. If you've been following along for a long time, I appreciate your support. If this is your first time here, we highlight key events that happen in the market over the past week. So I'd like to ask you a huge favor. If you learned something new, please give me a thumbs up. Helps the channel grow. Make sure to subscribe. We do this every single week. With all that has gone on in 2020, have we forgotten that there is a presidential election in the US this year? On this episode, we're going to recap if the markets are pricing in a Democratic win. We're going to take a look at if Joe Biden is elected, what could we see coming, and is that being factored in today? Stay tuned. All right, let's dive in. We got to hear from Joe Biden this week from a speech in Pennsylvania. Now, if you're not familiar, Joe Biden is the candidate for the Democratic Party going up against Donald Trump. And he released his economic plan, and that gave us an indication of the plans and the steps that he would take if he were to be elected in November. And it looks at, short term, what is he doing to get around the pandemic, and long term, what is he doing to make the US economy stronger in the future. Build Back Better was one of the main topics that Biden touched on in his speech. What that entails is creating jobs and focusing on bringing back the once strong American middle class. One of the ways that Joe plans on doing this is bringing manufacturing jobs back home. The estimates are that this $700 billion plan will create 5 million jobs in the long run. Not only will Joe Biden focus on the Buy American platform that he's kind of set forth so far, there will be other changes that the current market isn't taking into consideration. And the one that stands out the most to me is taxation. The lax tax rates that Trump had under his regime will definitely change. Biden will look to raise corporate taxes back to 28%, which will essentially decrease company earnings. Credit Suisse estimates that it would cut the S&P's earnings per share by about $9. Goldman Sachs has come out and stated that if these tax measures are imposed, then their earnings estimates for 2021 would be reduced by 12%. There is also a potential that Joe Biden could place restrictions on corporate share buybacks. Now, if you're not familiar with that, what companies are doing is they are buying their own shares on the secondary market with the cash that they've generated in the business. Another company may choose to, pay that out in a distribution or a dividend. And what this is doing is they believe it's creating value for the company and for the investor. So they're reducing the amount of outstanding shares, and this would help if you're looking at a company through an earnings per share ratio. You're reducing the number of shares outstanding, and that would inflate the EPS. In addition to the corporate taxes, there's talks that Biden may increase the capital gains to 39% for high net worth individuals. So it's not clearly defined yet because there's two different types. There's capital gains for on the short term if you own something for 12 months or less, and then there's capital gains for anything longer. Obviously that's not defined as of yet, but the theory is that if this capital gains tax were to be implemented, you would expect that these high net worth individuals would start selling their shares so that they don't have to pay a higher tax rate. Another strategy from the Biden camp to help bridge the gap between the rich and the poor is to raise the minimum wage across the board to $15 an hour. Albeit a great thing for the economy in the long run, it will have implications on the economy in the short run and will cause even further disconnect from the market at these current price levels. It seems like investors aren't even worried that Biden is leading in the polls, watching the markets rally over the past couple months. But let's take a look at the futures markets and see if we can find some trends of what investors are trying to tell us. We'll take a look at the ticker symbol SPY, SPY, which is the S&P 500. It's an index ETF. And we can see that there's a lot of open interest on put options that are out of the money. Now, open interest is, there just means a lot of contracts on the market. And then put option is basically you're expecting the market to go down. So in summary, we'll take a look and we'll deep dive into that further. Here are the SPY put options expiring November 20th, 2020 at 3 different price levels. So the first line is 150, meaning that the buyer's expectation is that in November, they expect the S&P 500 to be trading around the 1500 mark. This is about 53% lower than it closed this previous Friday. The last time that S&P was around this level was back in 2013 when we were on the road to recovery from the 08-09 Great Recession. I've also pulled the 205 and the 240, which put the S&P at 2050 and 2400 respectively. And what I want to point out is the open interest, which is on the right hand side. These show the number of active contracts, meaning that they have not been liquidated and are still in play. There are a lot of people right now hedging for downside risk come the election in the next few months. Now let's take a look at the December 31st contracts of this year. And at the bottom, we see 250 with a large number of active contracts. This is about 22% lower than close as of this Friday. This is in line with what the analysts are predicting if Biden were be elected. Now you can also see some of the other open interests and the numbers are definitely not as high. Analysts have been watching a rising premium for put options for the S&P 500 futures contracts for November into December. This is typically normal for an election year, but never this early for those types of trades. We have also seen the skew at its highest level since the 08-09 financial crisis. So the skew is the gap between the most expensive put option and the least expensive call option. I do not know what will happen come November 3rd, 2020 in terms of who will be elected. And we know with the polls that the polls are not always right. And although Biden has a lead right now, we don't know what's going to happen. The only thing that I wanted to highlight is that, in my opinion, I believe that the markets are overvalued if the Democratic Party gets elected come a few months from now. And what I want to highlight is the fact that if you are making any positions at this point, to make sure that they are hedged, that you are protecting yourself on the downside, and obviously that would risk a little bit of upside, but definitely safe going through these turmoil and uncertain times. Or make sure that you have a balanced portfolio that is set up for the current economic state. That's all for this week in the market recap. Thank you for tuning in. I appreciate your support. Again, I ask you, if you learned something new, please give me a thumbs up. Don't forget to subscribe, turn that notification bell on. We do this every single week. I'll also throw my Instagram up here. Please follow me there for some charts, motivational quotes. Thank you again for watching. Appreciate your support. Have a great week on the markets. Happy trading.